You visualized yourself standing in the arena. You saw yourself dismantling witnesses on cross-examination. You saw yourself delivering the closing argument that leaves the jury breathless. You saw yourself writing the appellate brief that changes the law of the land. You wanted to fight. You wanted to win. But there is a dark, cold reality that the Academy hides from you. Gladiators who do not understand supply lines starve to death before they ever reach the arena. An army does not march on its courage. It marches on its stomach. An empire is not built on brilliant ideas. It is built on the ruthless, mathematical extraction and allocation of resources. Money. Most lawyers are terrified of money. They are intimidated by numbers. They view accounting as a dirty, boring task beneath their intellectual dignity. They hand their books over to a third party, close their eyes, and pray that there is enough cash in the account at the end of the month to make payroll. This is the path of the amateur. The amateur chases the vanity metric of gross revenue. The amateur brags about $1 million verdict, completely ignoring the fact that it cost them $900,000 in 3 years of their life to get it. The amateur is cash poor, stressed, and one delayed invoice away from bankruptcy. The warlord understands that finance is not accounting. Finance is command and control. If you do not control the money controls you. If your clients dictate when they pay you, they are your masters. If you do not know your exact margins, you are fighting in the dark. Today, we transition you from a tactical fighter to a strategic emperor. This is Module 6, Financial Management for Lawyers. We are going to teach you the calculus of conquest. We will break down the mechanics of the war chest. We will show you how to track your ammunition, how to extract your tribute without apology, and how to maintain absolute sovereignty over your firm's survival. Welcome to the Logistics of Power. Part 1, the Sacred Vault, IOLTA, and Absolute Sovereignty. Before we talk about making money, we must talk about the one area where a single mistake will strip you of your power forever. The IOLTA, the interest on lawyers' trust accounts. This is the money that belongs to the client, which you are holding in trust. It is the unearned retainer. It is the settlement check. The amateur views the IOLTA as an administrative annoyance. The amateur gets sloppy. They transfer money a day late. They accidentally pay a firm expense out of the trust account because the debit cards look similar. They borrow from Peter to pay Paul, promising themselves they will put the money back next week when the big case settles. This is not a mistake. This is professional suicide. In the art of conquest, we prioritize strategic dominance over risk mitigation. But you cannot dominate the battlefield if the governing body strips you of your right to hold a sword. The Bar Association will forgive incompetence. They will forgive a missed deadline. They will forgive a blown statute of limitations. They will never ever forgive you for touching the client's money. To the warlord, IOLTA compliance is not about fear. It is about absolute discipline. Discipline is the foundation of dominance. If you cannot perfectly segregate your funds, you lack the psychological rigor required to rule an empire. You must build a wall of iron between the operating account and the trust account. Never commingle, not for a minute, not for a second. Never touch unearned funds. When a client hands you a $10,000 retainer, that is not your money. You are poor. You do not touch a dime of it until you have generated an invoice, sent it to the client, and earned the fee. Reconcile monthly. You do not guess. You do not estimate. You track every penny to the exact decimal point. When your IOLTA is flawless, you eliminate a massive vector of anxiety from your mind. You are unassailable. Let the bar audit you. Let the enemy complain. You hand them the ledger with a cold smile. Your books are a fortress of glass, completely transparent, completely impenetrable. This absolute compliance gives you the freedom to be aggressive everywhere else. Part 2, the calculus of conquest, tracking, and the break-even point. You cannot conquer territory if you do not know how much fuel is in your tanks. The fundamental failure of the solo practitioner is the failure to measure. They operate on bank balance accounting. They look at their phone app, see $15,000 in checking, and think, I am rich. They do not realize that $12,000 of that is already earmarked for taxes, software subscriptions, and next month's rent. You must transition to accrual and projections. You must see the money that is coming and the money that is leaving before it ever moves. You must know your burn rate. What does it cost your empire to exist for a single month? If you generate $0 in revenue, how much money bleeds out of the castle? You must track every subscription: Clio, Zoom, Westlaw, malpractice insurance, the virtual receptionist, the internet bill. Add it all up. Let us say your burn rate is $4,000 a month. Now add your personal survival number. What do you need to eat, pay your mortgage, and live? Let us say that is $6,000 a month. Your total required outflow is $10,000 a month. This brings us to the most important metric in your business: the break-even point. The break-even point is the exact amount of revenue you must generate to survive without taking on water. If your outflow is $10,000 and your average case generates $2,500 in profit, your break-even point is 4 cases per month. Do you see what just happened? We took an abstract, terrifying concept, "I need to make enough money to survive," and turned it into a concrete, tactical target. I need to kill 4 targets this month. The Warlord wakes up on the first of the month with a singular mission: hunt the 4 targets. Everything before case number 4 is survival. Everything after case number 4 is conquest. When you track your expenses ruthlessly, you lower your break-even point. If you cancel the useless country club membership, downgrade the expensive office to a virtual address, and cut your burn rate by $2,500, you only need 3 cases to survive. By cutting waste, you bought yourself freedom. You bought yourself time. You made your empire lighter, faster, and harder to kill. Do not run your firm on a notepad. You must use a financial command center. QuickBooks Online. It integrates with Clio. It tracks your P&L, profit and loss. It shows you your exact margins. If you do not know how to read a P&L statement, you are financially illiterate. You must learn. Take a CLE course on law firm accounting. Read the guides. Ignorance of the numbers is a surrender of your sovereignty. Part 3, the art of extraction, billing and invoicing. Here is where the psychology of the amateur destroys their empire. The amateur feels guilty asking for money. The amateur finishes a massive project, saves the client from ruin, and then timidly sends an invoice weeks later, hoping the client won't be angry. When the client doesn't pay, the amateur makes excuses. They are probably just busy. I don't want to bother them. The amateur operates from a position of subservience. The Warlord understands the psychology of extraction. You are a mercenary of justice. You possess specialized knowledge that the client desperately needs to survive their ordeal. You are the shield and the sword. You do not apologize for your fee. Your fee is the exact measurement of your power. Rule 1. The upfront retainer, the toll on the bridge. Never ever work on credit unless you are operating on a contingency fee model. Personal injury. If you are billing hourly or flat fee, criminal family business, you demand the money up front. Why? Because the client's gratitude is inversely proportional to the time that has passed since you solved their problem. When the client is in jail or facing a lawsuit, they will promise you the moon. You are their savior. 6 months later, after you have won the case, the danger's gone. The fear is gone. And when they receive your bill for $15,000, they do not see a savior. They see an extortionist. They will scrutinize every line item. They will dispute the hours. They will refuse to pay. The Warlord extracts the tribute while the fear is highest. My fee is $10,000. It goes into the trust account today. I do not file the notice of appearance until the wire clears. This is dominance. It filters out the tire kickers. It filters out the parasites. If they cannot afford you, they are not your problem. Let them go drain the energy of an amateur. Rule 2, frictionless extraction. When you do invoice, you must remove all friction. If you mail a paper bill and ask for a check, you are inserting a massive delay into your cash flow. You are giving the client an excuse to procrastinate. The check is in the mail. In the modern empire, payment must be instantaneous. Use LawPay or the Clio payment processor. When you send the invoice via email, There must be a giant glowing button that says Pay Now. They click the button, type in their credit card on their phone, and the money hits your account. Make it easier for them to pay you than it is to ignore you. Rule 3. The relentless follow-up. If an invoice hits 30 days past due, it is a crisis. The amateur ignores it, hoping it resolves itself. The warlord attacks the deficit. You implement automated reminders in your software. Day 3, gentle reminder. Day 7, firm reminder. Day 14, stop work order. Yes, you stop working. Dear client, your account is past due. All work on your matter has been paused until the account is brought current. You are training the client. You are establishing the boundaries of reality. You are teaching them that your time is a premium asset and access to that asset requires capital. Part 4, the king's share, tax basics for the sovereign. You have built the machine. You have extracted the cash. Now you must deal with the sovereign, the government. The amateur treats taxes as a surprise. Every April, they look at their bank account, realize they owe $40,000 to the IRS, and they panic. They scramble. They take out loans. They are enslaved by their own lack of foresight. The warlord understands that taxes are the toll you pay to operate on the sovereign's roads. It is a mathematical certainty. As a self-employed lawyer, whether you are an LLC, a PLLC, or an S-Corp, you are responsible for both the employee and employer side of the payroll taxes. The doctrine of preemptive severance. You do not wait until the end of the year to calculate what you owe. You sever the king's share immediately. Open a secondary savings account. Label it Tax Vault. Every time a fee moves from your IOLTA to your operating account, you take 30% of it, or whatever your CPA advises based on your bracket, and you transfer it to the tax vault. You do not look at it, you do not touch it, it does not exist. When you log into your bank, you only calculate your power based on the operating account. When quarterly estimated taxes are due, you simply open the vault and hand the king his share. There is no panic. There is no stress. Furthermore, the warlord hires a brilliant CPA. Do not use TurboTax for your empire. Do not ask your uncle for advice. A high-level CPA is not an expense. They are a shield. They will structure your entity, like an S-Corp election, to minimize your self-employment tax. They will advise you on Section 179 deductions for your equipment. You pay them $2,000 a year to save you $15,000 a year in legal tax avoidance. That is strategic resource allocation. Part 5, arming the rebellion, funding options and capital. How do you start the empire? How do you fund the initial siege? There are two schools of thought, the school of debt and the school of sovereignty, the trap of the small business loan. Banks will offer you lines of credit. They will offer you massive small business loans. The amateur takes the loan. They borrow $100,000 to build the perfect office, buy the mahogany desk, and run expensive billboard ads before they have a single client. They have placed a collar around their neck. The bank holds the leash. Every month, the interest compounds. The burn rate is artificially bloated by debt service. The amateur is no longer fighting for themselves. They are fighting to pay the bank. They are a serf on their own land. The weapon of bootstrapping. The warlord despises debt. Debt is a compromise of your absolute autonomy. If possible, you fund the empire with personal savings. Before you launch, you save 6 months of living expenses. This is your FU fund. It allows you to say no to bad clients. It allows you to weather the initial winter of launching a firm. If you do not have savings, you operate lean. This brings us back to Module 5. You do not buy the mahogany desk. You work from your kitchen table. You use a $100 virtual address. Your total startup cost is the price of a laptop, a Clio subscription, and malpractice insurance. Maybe $1,500 total. You bootstrap. You kill what you eat. You get one client. You take their $3,000 retainer. You use $1,000 to live, and you pour $2,000 back into marketing to acquire 2 more clients. You compound your own capital. By bootstrapping, you retain 100% equity in your mind, your firm, and your future. If a pandemic hits and revenue drops to 0, The lawyer with the $5,000 a month loan payment faces ruin. You, the bootstrapped warlord with a near-zero burn rate, simply hibernate. You wait for the weak to die off, and you emerge to claim their market share. Part 6, the activity, the war room blueprint. We do not deal in theory, we deal in execution. Your mission for this week is to build your financial command center. You are going to create a simple, brutal budget spreadsheet. Do not overcomplicate it. Open Excel or Google Sheets. Column A, the burn rate fixed expenses. List every single recurring cost. Malpractice insurance, $1,500. Case management, Clio, $70. Email/Drive, Google Workspace, $20. Virtual receptionist, $250. Legal research, Westlaw/Lexis, $1,000. Virtual address, $100. Cell phone, $80. Website hosting, $30. Total your firm burn rate. Column B, the survival rate, personal expenses. List what you need to survive. Rent/mortgage, food, utilities, health insurance. Total your personal burn rate. The calculation, add firm burn plus personal burn. Multiply that number by 1.3. This accounts for the 30% you must set aside for taxes. The result, this final number is your absolute break-even point. Look at it, memorize it, print it out and tape it to your monitor. This is the monster you must slay every single month just to stay alive. Once you know the number, you can reverse engineer your strategy. If your number is $8,000 and your average fee is $2,000, you need 4 clients a month. That means you need 1 client a week. That means you need to generate 3 consultations a week, assuming a 33% close rate. The chaos of running a business has suddenly been distilled into a singular, hyper-focused tactical objective. Book 3 consultations this week. Conclusion: the sovereign's treasury. Financial management is not about being a penny pincher. It is not about greed. It is about power. When you have cash reserves, you have the power to say no to the toxic client who will ruin your mental health. When you track your margins, you have the power to ruthlessly cut the practice areas that drain your time and double down on the ones that build your wealth. When your IOLTA is pristine, you have the power to sleep through the night, untroubled by the fear of the bar association. The amateur views money as a reward. The warlord views money as ammunition. Build your war chest. Know your numbers better than you know your own name. Do not apologize for the extraction of your fees, and never ever surrender the sovereignty of your treasury to anyone else. This is the way of the art of conquest. On this channel, we cover a range of topics, like the one in this video. If you enjoy this type of content, please don't forget to hit the subscribe button, otherwise we may never see each other again. See you again soon.